In this video, I want to start off by just going over a simple equation rule, right? So we know that in an equation, the left side must equal the right side. So that's pretty much algebra. And we can have infinite combinations of the left and the right, and they can all look different, but they can all be sort of the same. So here's an example where 5 is equal to 4 plus 1. Okay, and we know this is true because the left side equals the right side. On this side, we have 5 equals 3 plus 2. These two equations look completely different, but they're the same because the left side equals the right side. Here we have 5 is equal to 1 plus 1 plus 1 plus 1 plus 1. Again, these three equations are the same even though they look different because the left side equals the right side. And then we have 5 is equal to 25 divided by 5, and it's the same thing. And you can come up with as many different ways on the right side to equal 5, right? You can do 5 times 1. I mean, it doesn't matter. But again, as long as the left side equals the right side, even though all these equations look different, they really are the same, okay? So now let's take that concept over to the simple accounting equation. So here's a journal entry handout. And just a note, you're going to use this handout quite a bit for the rest of this, for the next couple chapters, right? So you're going to use this handout quite a bit for the next 3 or 4 chapters. So this is going to be very helpful to you, and I've posted this in D2L so you can access. It's called the journal entry handout. So here we're going to start off with the simple accounting equation. Assets is equal to liabilities plus equity. This is the simple equation that we all know, right? So here we have assets, we have equal liabilities plus equity, okay? So that's the first one. But then we're going to take equity and we're going to break equity down into 2 components. One is contributed capital and the other one is retained earnings. Well, what is contributed capital? Well, contributed capital is whenever you have an investor invest in the business. That is, they contribute capital or cash to the business. It could be cash, it could be furniture, it could be services, it doesn't matter. They contribute something to the business, that's contributed capital. So retained earnings is really just net income that we decide to keep. How much of the net income we decide to keep, that is retained earnings. So now we can redo this equation, right? And say that assets is equal to liabilities plus contributed capital plus retained earnings, okay? So the first assets equal liabilities plus equity is the exact same thing as assets equal liabilities plus contributed capital and retained earnings. We just took equity and expanded it into 2 different components. Well, contributed capital and retained earnings can be expanded even more. So contributed capital, the name for contributed capital in a C corporation is common stock. Whenever there's capital contributed, stock is issued to an investor, and we do a journal entry or we record that in our accounting records as common stock. So contributed capital is really common stock. Okay, well, what is retained earnings? Well, retained earnings, right, is the amount of net income that you keep. Okay, so remember, net income is revenues minus expenses. So you take the revenues minus the expenses, you get net income. And then dividends is whenever you'll see this later on. Dividends is whenever you decide to give money to the shareholders. That's dividends. So revenues minus expenses minus dividends, right? That is retained earnings. So we can take retained earnings and divide it into revenues minus expenses minus dividends, contributed capital into common stock, and then we can redo this expanded accounting equation into assets is equal to liabilities plus common stock minus dividends plus revenues minus expenses. So this equation, right, I'll say this now, is very important. This is what we call the expanded accounting equation. And everything you do in this class from this point going forward is going to go back or agree back or link back to the expanded accounting equation. So this is something you're going to need to memorize. Assets is equal to liabilities plus common stocks minus dividends plus revenues minus expenses. And remember, this equation is the exact same thing as the first equation up here. So assets equal liabilities plus equity is the same thing as assets equal liabilities plus common stock minus dividends plus revenues minus expenses. We just took equity and divided into the contributed capital component, which is common stock, and the retained earnings component, which is revenues, expenses, and dividends. And so I'll explain more about this handout later, but for now, Our expanded accounting equation is assets is equal to liabilities plus common stock minus dividends plus revenues minus expenses. And you notice this equal sign here. So what that means is everything on the left must always equal everything on the right. So that's what we call the accounting equation in balance. So assets, the total assets must always equal liabilities plus common stock minus dividends plus revenues minus expenses. When we compute everything on the right side and get a number, it must always equal what's on the left side, which is the asset. Okay? So that's the expanded accounting equation.